Okay, guys. So if you've noticed, the stock is down. Obviously, the stock is down after the earnings call. It keeps going down more and more. And the negative news, the FUD is going crazy. And our favorite FUDster, our favorite Tesla bear is on the news again. Gordon Johnson is on the news. First time on the channel. Let's check this out and see what he has to say. This video is out by TD Ameritrade Network. Let's go.
Welcome back to Trading 360. It's time for the 360 round, all about Tesla. It's had its deliveries. They're still shooting for 1.8 million this year. Within the report, there were a lot of good things to discuss, and I guess when we talk to our bear here, he'll tell us some of the uncertainties. Hatem Diab, this is a bull bear debate.
It's going back up, 264.
Managing partner, Gerber Kawasaki Wealth and Investment Management. Gordon Johnson, CEO, founder, GLJ Research. Thank you both for being with us.
Man, imagine having your money.
On with us so many times. You say,
I can't imagine investing your money with GLJ now. Like, I don't know how their fund is doing, but man, like, I don't know who's investing with him. But yeah, okay, let's see.
Don't bet against Elon. While you don't give exact price targets, you certainly give the trend, and that is that you're a believer in Tesla and its stock. In the meantime, Gordon has basically a $24 target at the sell rating. So
what?
Gordon, hold on.
$24.
What did you like about Tesla, and why do you see this growing?
That's ridiculous.
Hey, Nicole, thank you for having me. Listen, it was a great report. They've reached $25 billion in revenue, almost at least. So they're like an 100 billion run rate. That's a very exclusive club to be on. Margins are good. I expected them to be a little bit less, but they came in at 18%. So that's also very good. And really, they're growing fantastically well, almost 50% top line. So I don't know what's bad in this report.
Yes, exactly. Oh my God. Yeah, that's so true. They're growing 50%. They're growing every quarter. They're making more and more vehicles. They're breaking records every single time. The margins are a little bit lower, but they sold more cars. So they're making a ton of money. And yeah, there's nothing, basically nothing was wrong with that report. Let's see what Gordon has to say.
Okay, so the first thing that Gordon's going to say is about the
same
margins.
old things that he says.
And Gordon, keep it short so we can have a nice discussion. Go ahead.
Yeah,
Gordon.
man, he's gonna ramble on for half an hour.
All right, so I think where the bulls are dead wrong is in the auto industry. You had a temporary chip and supply chain issue where you had shortages in 2021 and 2022. We know that used cars are selling for more than new cars, right? Which is an anomaly, and that allowed Tesla, who was willing to cut corners on chips, CNBC did a spread on this, to have artificially high margins. Now their margins are regressing back towards the mean. Their operating margins were 24% in the first quarter of 2022. They were 9.6% last night, down from 11.8% in Q1. So it's just not the company that people thought it is. Their earnings profile is much lower, and they're still cutting prices. So that's the problem, and I think that's the story for Tesla in 2023.
Look, I mean, at this point, yes,
the
valuation certainly seems very high. The prices they cut, Ford has been cutting prices, but they are creeping a little back higher. Hatem, let's kick it off. What is it about Gordon, what he's been saying? I mean, we know that the factories, he said, Elon Musk said that in the third quarter, production may be down because they've been doing some factory upgrades. You really like what they've been doing in Berlin and Austin, for example, Hatem?
First of all, the margins are going down because Tesla is investing heavily in its growth. I think that you want a company that is a growth company to be investing and really creating new products and batteries and chips. They just filed in Berlin for a new plant that's going to manufacture over 1 million cars in Europe. So if you think about that, currently Berlin does, I don't know, 200,000 cars. So I think the growth potential there is really tremendous. And as far as what Gordon said about the chips, Tesla is also investing, they said, I think, over $1 billion in their dojo and their chip manufacturing.
Baby.
So from an AI perspective, it's probably the only company that really has a true AI or solution for self-driving car that is really sustainable and that will continue for a long time.
Yeah, so Tesla is currently scaling production of they're starting tooling of the Cybertruck. They're expanding their Berlin factory. They're expanding their Austin factory. They're doing heavy research in full self-driving with the Dojo. He said they're going to invest $1 billion in the Dojo computer architecture. And so they're investing heavily into all these new things. The Mexico plant with the new half-price vehicle that they're going to be making, and they're still printing money. They're still making a ton of money. Their margins are higher than any other automaker right now, except for maybe Porsche or something. But they are killing it. Every other EV automaker, whether it be Ford or GM trying to do EVs, they're losing tons of money. Even Polestar is losing 45. They're negative 45% margins. Polestar. Ford is negative 40%. Quarter Q1 they were negative 102% on their electric car margins. So Tesla is even 8-9%. That's still like industry high, you know. And that's the thing. They're industry high with their margins, and they're expanding in all those different areas. Battery too, battery cell production, they're expanding on. AI, they're expanding on. New vehicles, bigger factories, retooling. So if you think about all the things that they're expanding and investing in, you would think that they'd be losing money, but they're still industry high for margins.
Okay, and so Gordon, I know that you're not so trusting on the chips. You've also often said that you're not even a believer in the fact that they are making batteries. You don't believe really in the self-driving, right?
Well, they're making batteries, but everything they said at Battery Day, we now know is a farce. Listen, when people like Gerber Kawasaki don't have models, they don't understand what's going on. Tesla's other income was a $370 million benefit this quarter to the bottom line.
Has or doesn't have.
The quarter, they would have missed numbers. If you look above the other income line, their operating income was down 3% quarter over quarter, 10% year over year. Listen, this is no longer a growth company. It's an auto company. 86% of their revenues from selling cars, 98% of their gross profit from selling cars. What auto companies have to do is cut the price to move units. 2,000 auto companies, Warren Buffett made this point, 2,000 auto companies emerged in 1905. Nearly all of them went bankrupt. Why? Because it's highly intensely competitive, high capital intensity, and Tesla is being shown to be an auto company. And no matter what Gerber Kawasaki says with respect to how great they love the company, margins are collapsing. They're going to continue to collapse. And the reason why they produce more cars than they've sold now for a record 5 straight quarters in a row, and their production is going to be down in Q3 is because they have a demand problem. They're getting crushed in China, market share 30% to 11%. They're getting crushed in Europe, market share from 30% to 15%, and their market share is falling in the EU. And again, now that we don't have supply chain issues, they're suffering.
Okay,
yeah, he keeps going. So one of his biggest arguments. So first of all, every 2 or 3 years, he changes his bear case. Like it's always something different, and then Tesla destroys it, and then he'll change it up again, and then Tesla will destroy it. So yeah, he just keeps changing it no matter what. So like he was saying Tesla is just a car company. That's so for us. If everyone thinks that Tesla is just a car company, for us investors, it's a great thing because we can keep investing in the company. We could keep buying when it's low, keep building our portfolios up. Because when they realize that it's more than that, then the stock is going to keep going higher because it's not just a car company. It's a battery company. It's an AI company. They have insurance. They're going to be probably getting into the HVAC systems. So it's much more than just a car company. It's a renewable energy company with the solar. So it's way, way more than that. But he just keeps seeing it as a car company. His vision is very narrow. His vision is like this quarter, next quarter. He doesn't really count the 5, 10, 15 years in the future. He just sees quarter over quarter what's happening now. And he doesn't look too far off. Hey, Charlotte, how's it going? This is my daughter, Charlotte. You just did your hair? All right, see you later. So yeah, let's continue. Let's see the rebuttal.
Let me jump in here because the first thing is I'm going to say is how do you know what models Gerber Kawasaki has and does not have? That is you can't assume anything like that. However,
Muted.
I'll let that go
Shut up.
and say, look, when you talk about market share, Hatem, there's no question that the competition has been increasing. Do you think that they can continue to be the leader that they are? Look, there are many people who think it's overvalued, but does $24 price target and a sell rating seem ridiculous to you?
Completely ridiculous.
Thank you for saying that, Nicole. I don't know what Gordon is talking about models. I don't think I need to showcase any kind of our models, but ultimately, what Gordon is looking at is completely wrong. What Tesla is trying to do is trying to go after the whole car market, not just the EV market, and that's only 6 or 7% currently of the 15 million cars that we sell in the United States, or 100
tons
million
of room
globally.
to grow.
So if Tesla has 60% of that market, but that market itself is growing, so we don't need Tesla to have 70% of the whole market. So I think what's missing here is the fact that Tesla, the Model Y, has been really the top-selling car basically everywhere. So the growth story here is really just getting started. And they have the best battery technology. They have the best software. So they're really the top dog, no matter how you look at it.
Okay.
Yeah, that was
Gordon,
great.
Cybertruck is going to be produced in high volume
Great
next
rebuttal.
year. Final thoughts here, Gordon.
So we don't know if it's going to be produced in high volume, right? It's 3 years late. They were supposed to be producing high volume this year. Now they should have next year. But I just want to highlight something he said when he says they lead everywhere and they lead in batteries. That's just not true. They don't lead in China. That's BYD. They don't lead in Europe. That's VW. And now you have Ford and GM coming. With respect to the final thoughts, look, Elon Musk is telling you they're going to produce less this quarter, right? That's a big problem. And he's telling you they're going to continue cutting prices, which they've done. You don't cut prices. CarGurus has Tesla's prices down 35% over the past year. The average car is down 5%. GM's down 1%. Ford is up 1%. So they're cutting prices far much more than the competition. The reason is because people don't want to buy their cars. They have 1.67% share globally, 4.4% share in the U.S. This isn't a leader. They are a laggard.
Okay, you had to tell them about the margin that you were looking at, the X-Auto margin, quickly.
I mean, 18%. Come on, Gordon. What are you talking about, buddy? It's
yes. Get him. No.
They sell direct to the customers, which means their discounts are in SG&A, whereas other automakers' discounts are in gross margins. Look at the operating margin. They are lagging.
Gordon, $24. Come on, Gordon, $24.
It's going to get there. When it does, we'll have you on to say congrats.
Oh, come on, $24, Hatem?
I mean, it's silly. I mean, the company's doing $100 billion in sales and 18% margins. Come on.
Where's the real value of? Where should it really be, Hatem?
Listen, they're a software company. We haven't seen what the potential is of full self-driving. We haven't seen what the potential of this AI revolution. They're spending a lot of money in there. The Cybertruck, yes, they're not going to produce a lot of them, but this is going to be also another top product. I think they're going to sell hundreds of thousands of it. And ultimately, this will own 20% of the whole car market.
Okay, let's leave it right there. I like the bull bear debate. Thank you both very much. Hatem Diab, Gerber Kawasaki Wealth Investment Management, and Gordon Johnson, GLJ Research.
Gordon Johnson,
Thank you
the class
both for being
clown,
on.
once again comes in. Gordon Johnson never fails, says the same thing over and over and over again until that's proven wrong, and then he switches it up to another thing. You can go back. There's interviews from years ago where he's just saying the same thing over and over again, and then he switches it up, saying that they're just a car company. The growth story's done, even though EVs only are 6% of the market right now. So they're not going after just EVs. They're going after the whole car market. So there's so much room to grow. There's like 94% there's left to grow, right? So Tesla's going to take a huge chunk of that. So yeah, the future is electric cars. If you've driven one, if you own one, you know, it's like going from a dumb phone to a smartphone. It's just a better product in every way. So less maintenance. You charge it up at home. You don't have to go to the gas station. There's no oil changes. It's just safer vehicle. The entertainment, it's got Netflix, Disney Plus, it's got YouTube in the car. It could drive itself. There's so many things. I can go on and on about how much better it is as a product than internal combustion engine car, and that it's the future of transportation. So there's just no doubt that Tesla's going to take a huge chunk of that market share, and they're just going to dominate. So Gordon is going to be proven wrong. It's just going to take some time, but he's going to be proven wrong in the future. Let me know your thoughts in the comment section down below. What did you think of today's video? Don't forget to like and subscribe to the channel. Let's try and get 1,000 subscribers. I want to monetize this channel. I want to put every penny that I get into the Tesla stock. Let's try that together. I have a Patreon. If you can support me on Patreon, that would be dope. If you feel like supporting this brand new channel over on Patreon, check that out. I'm going to add exclusive content there that goes just to Patreon real soon. As soon as I get my first patron, I'm going to start adding new content over there on Patreon. So check that out in the comment section, and I'll see you next time.